All right, everybody, welcome back to Matt Money. Today we have the opportunity to talk to Daniel Major, who is the CEO of GoviEx Uranium coming out of Africa. This company is actually going into from the exploration stage to the development stage. They have over 143 million pounds of uranium in their M&I resources. Daniel himself has over 30 years of experience. He started as a mining engineer in South Africa, moved to being an analyst in HSBC as well as JP Morgan. And then he transitioned to Basic Element, where he became chief executive officer. And then in 2012, he joined as CEO of GoviEx, and obviously has transitioned the company very remarkably, I might add, from an exploration company to now becoming a development company for uranium. Very impressive start. Obviously, you can check out the company on the OTC markets at GVXXF and also the TSX at GXU. Daniel, thank you so much for joining us today. Give us a little bit of context about GoviEx and also yourself if you'd like. And obviously you are going to touch a lot about the 3 mines that you have.
Yeah, thanks, Matt, and thanks for the intro. Yeah, so you're right, I'm a mining engineer. I still put that down when I go on my immigration forms. What is your job? I'm a mining engineer. I did start in Southern Africa and in uranium, then I moved into the platinum industry for a while, working in the open pits. Then I did M&A for an old company called JCI, went to the banks. Then, yeah, after 7 years of writing research, and I was part of a #1 rated global team, decided I couldn't write research anymore. I needed to go back to being an engineer. So, yeah, I spent some time in Russia. I was heading up the ferromolybdenum business. So I was the CEO of that business, and I was chairman of the pulp and paper business. And pulp and paper, surprisingly, is very similar to mining rocks. Very many similar attributes. Then I did work in South America on exploration and gold mining in Canada before coming across to GoviEx. It was really at that transition point when they were going from being an explorer, as you said, to being a developer, and they needed to get, the geologists kind of step back a bit and let the mining engineers take over. We now currently, when I started, we only had the 1 project. We had the Madaouela Project in Niger. The company at that point had done some 650,000 meters of drilling. It was one of the largest drill campaigns anywhere in the world at the time. And we took that through to mine permitting in 2015. One of the pleasures of being in Niger and in Africa in general is permitting gets done very quickly. So we got our mine permit in somewhere between 4 and 6 months from application. So powered through. And it's actually in the mining code. It says it will take you between 4 and 6 months to get the mining code. They'll give you the approval within that time or not. And so at that point, we felt in 2016, the uranium market was kind of due for a move upwards. We were right, but it just didn't move as fast as we thought it was going to do. So we cut a deal with Denison Mines at the time, who had acquired a project and was sitting with 2 African projects and really wanted to focus on their Canadian project. So in exchange for shares, we took off them the Mutanga Project in Zambia and the Falea Project in Mali. So the great thing is we're now one of the few companies out there that's got multiple projects. We have a pipeline. 2 of our projects are fully mine permitted, so they don't need any more permits from that perspective. Mutanga does need its update on its environmental permit. Niger is fully permitted in all directions. And then Mali's a pure exploration play, really. It has got a resource. I mean, it has 30 million pounds in total resource sitting there. And we can discuss that a bit later in the call.
Yeah, but so we can just jump into one of the other questions I had. You just sanctioned a 6,000 meter drilling program and in Mali there. Yeah. And a lot of that to delineate some of the uranium resources, or is it coupling that with some of the other metals that you have found in place there as well?
Yeah, it was really to try and get a grip of the whole package there. It's an interesting one because what you got is a flat-lying sandstone, permeable sandstone, between a sort of the Birimian greenstones and a sort of laterite dolerite cap. And it's structured on the fault. So as you can probably appreciate, given your background, the hot juices come up the fault, find this nice permeable sandstone and go, well, this is great. I'll go and lie down in here because it's nice and flat and it's nice and permeable. But the hot juices have come from somewhere else. And it's interesting because it's got copper, it's got silver, it's got gold, and it's got uranium.
Mhm.
So we did some work on it from an IP to say, all right, well, we can keep going looking for these flat-lying ore bodies, but actually there may be a bigger, bulkier ore body sitting right underneath. And lo and behold, we've come up with a fairly substantial IP target that's right underneath the uranium deposit and along strike. And the company who owned it before us would stop their assaying as they went through the sandstone. They wouldn't bother to assay lower down. Now, it has intersected sections of gold and sections of copper. And in fact, we've got one hole that ends in 5,000 ppm copper, just stops at that point. So the plan is to really drill down deep and say, all right, what's down here? We could have a whole bigger uranium project, or it's a copper, silver, gold project. There is one other, major copper, gold, uranium project out there, which is Olympic Dam. We're not saying it's that, but the sort of that kind of target is what we're looking for. And who's to say it's not a uranium project as much as anything else? But we need to know more about it, so we know what to do with it.
Yeah, for sure, for sure. Very interesting. So multitude of ways we could take this. I guess one of the key things I want to talk about, and then we can talk maybe a bit about when you guys are actually going to see some uranium getting out of the ground.
Yep.
But spot price uranium is already up 40 to 50% over the last year, which is impeccable. I think when I first started covering some uranium companies about 6-7 months ago, price was about 30. Now it's hanging around the 43 to 45, which per pound, which is absolutely astonishing. Aligning that with where we're going in terms of the world's transition towards renewables and kind of aligning towards the 2015 Paris Agreement, do you see that 43 to 45 being a floor price for uranium going forward? Or how do you see the uranium price kind of moving as we transition? Obviously, I know you're not a wizard, so this is all speculation, but just really curious from that perspective and your expertise.
Yeah, I mean, at the end of the day, a lot has happened since 2015, and I think the COP conference last year in Glasgow kind of highlighted that change. And you have gone from nuclear being verboten and no one really wanted to talk about it, and it was politically unacceptable, to an increasing realization around the world that they want to go green, and you can't just do it with renewables. You have got to have nuclear as part of the strategy. And that is expanding even further when you start to look at the alternative uses of nuclear power in things like hydrogen production, because its capacity is there, and also it produces a lot of heat that's not used for anything else. And so you can use that heat for it. Desalination, centralized heating systems are all other areas. But you've seen sort of in the last WNA report was 2.6% per annum growth. The one before that was 2%. So you're starting to see that. You've seen the US now committing, large amounts of money towards new technology for nuclear, supporting the existing nuclear reactors. You continue to see places like China, India, UAE pushing out. Eastern Europe as well, saying, look, we can't go solar or wind because we don't have those alternatives. So if we're going to transition, we need to have nuclear. And so the positive trend there is great. The other thing that you've got out there is some of these smaller applications, the small modular reactors. These go from 10 megs all the way up to 300 megs. A big reactor is kind of 1,300, and they're in pairs. You're also looking at nuclear being, analyzed for shipping. We already have nuclear icebreakers and aircraft carriers and submarines. They're now looking at nuclear as an application in commercial shipping. Interestingly, it doubles the speed of a ship. So they become, move a lot faster, and you do it in a sealed battery form. So there's a lot of new areas for it. On the supply side, which is really what you're seeing kicking into the price, is that, nothing's really been built since 2011. Mines have been closing instead, either because they just had to shut up shop completely, or because they were closed up like Cameco did with MacArthur River. The major producer in Kazakhstan pulled its production back 20% and is holding it back all the way in through next year. So you're sitting with about a 30% deficit, supply-demand deficit out there, which needs to be filled. The other thing that you've seen is that secondary supply was supporting, but that's been drawn down quite fast. And now what you're seeing, and is really highlighted today, is that most of the metal purchased is under long-term contract, not under short-term. So while the spot price has moved, the long-term has moved, but now you're starting to have utilities saying, all right, where am I going to get material from out in the future? Some of the big mines are due to close at the end of the decade, Cigar Lake, a lot of the Kazakh. So it's a case of, okay, we're going to have to start paying higher prices here. More importantly, we have to start locking down price. The unrest in Kazakhstan has raised the issue of supply concern, security. You know, if you just spent $12 billion building a nuclear reactor, you want to make sure it's got juice in it. So, you know, they spread it around. Yeah. So there is a lot of kind of these factors, but you're starting to see the beginning of the long-term contracting market really kicking off. And that's the real driver. And you're looking at a big supply deficit up front. The only way to fill that supply deficit is price. And that's where we position ourselves. We're permitted, and we can go into production, and we're working towards that now.
So I love this conversation, because I feel like when the pandemic truly started, a lot of people were moving out of obviously very carbon intensive oil and gas producers and really moving towards EVs and the renewable future, obviously to being aligned with ESG, as some of these institutional investors have kind of left that. And now it's really started to be a pendulum swing sort of back to the middle, where you're also including, well, you can't just have wind, you can't just have solar, you also need to couple it with uranium as sort of a help to transition as well. So I think that obviously has definitely put a good, I guess, support into the price kind of going forward, as people start to recognize that aspect of things. Very curious, with what the mines you have, obviously in Zambia